All right. Well, we do have new people on the team, and people will be watching this after. So, Joe, if you want to kick it off, just quick intro for yourselves, and then now we can jump into some mortgage stuff.
Sure. Well, thanks for having us on. For those that don't know me and Josh, we are partners here at Mortgage Connection. So for those who have been at the BRIX office, we're just on the floor above you. I've been working with the BRIX team for, I think, since it started, basically. So happy to be any kind of mortgage support you can use us for any clients, any questions you have. And obviously, we're in the same building. We're really close. So feel free to come up and say hi. And yeah, thanks for having us on here, Andrew.
All right. Josh, wanna...
Yeah, no, exact same. Joe and we've been business partners for quite some time now. We started Mortgage Connection in 2018, the two of us and our business partner, Robbie, but we've certainly been in business. I don't even want to say how many years now, well before glasses and everything else along the way. But yes, your neighbors at the office and more than happy to chat, help out with any questions. We've always been there for the realtors that we work with and clients, whether we're doing the deal or not. If you have a mortgage question and it's going to help everything, just reach out to us. We're here for you.
Yeah, guys, I have an awesome team, so definitely make use for all the mortgage stuff for sure, and questions and comments. And we were just saying, so I want to I'll get one of them to come down once a month for the Monday morning meeting, and that way we can just give a quick mortgage update once a month from the guys too. So that'll help keep us on track. And then there's more people in person for Monday morning meetings as well. So more fun. All right, I guess kick us off. Where are we with rates? Bank just lowered the overnight rate. So I guess start us off with that. Where do you kind of see that going for the rest of the year?
Very timely, I will say. Joe and I just got back from a couple days in Whistler, where we listened to a chief economist, or former chief economist, sorry, speak. And basically, this was all the conversation. So, if I may, and Joe, please hop in anytime. You're right. We did just see Bank of Canada cut the overnight rate, based on what Dr. Cooper was saying, the economist there at this event, and the sentiment of many, is that we should see at least 1 to 2 more reductions to that overnight rate, the prime interest rate, here through the remainder of 2025. So that's very positive. Joe, do you want to chat about bonds? Because that's super fun.
Yeah, so I mean, I think one of the kind of misconceptions often with clients is they hear the Bank of Canada lower the rate and they think that means everything's changing. And so one of the things we're always trying to educate and re-educate people on is just that movement is going to directly impact variable rate mortgages or lines of credit, anything tied to the prime rate. It doesn't necessarily mean that fixed rates are going to move with it. So you hear the Bank of Canada lower rates, that doesn't mean someone who's got a fixed rate or has a pre-approval with a fixed rate is going to see that rate drop. That being said, there has been quite a bit of pressure on the bond market. That's what those fixed rates are tied to. And we are seeing those rates start to come down as well, but they don't move step in step with a Bank of Canada announcement. And there is probably more room for those rates to come down. Not surprisingly, the banks and lenders tend to be a little greedy sometimes. And so they're probably taking a little more profit on those fixed rates than they could be right now from a traditional standpoint. So again, we're probably going to see interest rates come down a little bit more in this last quarter, both on the fixed and variable. Kind of my key message in there for any of your clients is if you have someone pre-approved, it's worth doing a review with them to make sure that they have the best options locked in. Also, if they were really tight and trying to get to, their ideal purchase price but weren't quite there, any kind of rate drop would help with that. So it's a good time to just have them double check and make sure that they're, have the max buying power that they can have just with these rate drops.
I guess to continue on like fixed versus variable. So, I mean, I'm on variable right now and I feel confident kind of riding that down for now. But I guess what's the advice or kind of most clients are getting right now?
Again, it's really up to someone's appetite. I'm on variable. Joe, I believe you're variable. Yeah. So I think that in itself will tell you where we're leaning towards. Right now, with just so much downward pressure on markets, positive outlook for the prime interest rate, like I think we might get back to a place where people stick with variable again. Like I've got clients that have gone into variable and they are optimistic fixed rates will come down and they look forward to locking, but we may be in an environment for a while where variable, you just ride it out. That being said, one of the slides I took a picture of, and I do apologize, just outline what they're thinking for the bond market here for the next little while. That one on the closest to my finger there, that's for this next year. And then 1 year out is where they're expecting that the bond market will be at its lowest. So based on that sort of data, then the following 2 years even lower than today. But that's showing us that in the next 2 to 3 years, we should see these fixed rates come down for where they are today, if it's based on the predictions of the bond market. So even if I do have some fixed rate focused clients who've gone variable, and we're going to watch it closely for them and monitor rates and potentially, hopefully, lock them in at a lower fixed rate here in the years ahead. That being said, we're also seeing finally for the first time in a while where the variable interest rate out of the gate is sometimes lower than the fixed interest rates. And we haven't had that in a while. For a while, it's been that if you're in a variable rate mortgage, your rate today is actually higher than the effective rate had you taken a fixed mortgage. But with this recent reduction to prime, and it seems that lenders haven't really affected the spread that they're offering, we are seeing some situations where you're in a lower rate right out of the gate on the variable. And again, any more reductions to prime and you're just that much further ahead. So that was a ramble. I'm sorry.
Bill, you got a question? Sorry.
Yeah, I got a quick question for those that don't know. Maybe you guys can tell us how the bond market relates to mortgages and why you bring the bond market in and those predictions related to the rates.
Sure. So, I mean, the simplest way to explain it is lenders are lending based on deposits in. So what they're paying out to an investor is that bond. So they're paying that money out. Someone buys a 5-year bond, they're paying that return. The mortgage is what they're earning on as interest. And the difference between the two, or that spread, is kind of their profit margin. So in general, if you look at, say, a 5-year bond yield, you would see a lender want to be priced on the low end about 1.2% above that. And on the high end, if they're taking a bigger spread, like 1.6, 1.7. So if a 5-year bond's at 3%, you could see interest rates at 4.5% for a 5-year fixed, if that makes sense to you.
Joel is just saying how the rate drops affect how people get approved. So I mean, I know they have to get approved at a higher rate, so maybe.
Sure. So everyone is subject essentially to the stress test. So how that works is your qualifying is based on whatever your contract interest rate is. So the interest rate you're being offered from your lender plus 2%. So you're not getting that higher rate, but you're qualifying based on it being whatever your interest rate is plus that 2% stress test. So if rates drop 0.5%, now your stress test is 0.5% lower, and that's going to lead to a higher buying power. So any kind of rate drop is a good news story for purchasing power. The reverse is also true, though. So if you have someone who's sitting on the fence and suddenly rates are going up and they have rates that are expiring, they could suddenly qualify for less. So with that stress test, which it's a pretty robust test. Like it really does shrink what someone's affordability is from a mortgage standpoint. So any kind of adjustments in rate does have a pretty significant impact on what that number could look like.
Joel, you got anything else to follow up on that?
Yeah, I guess it's probably a case by case scenario, but if somebody's pre-approved for 400, how much more purchasing power are they truly getting off of a rate drop like we just recently got? Is it anything significant, or is it just a small amount? Or
it certainly can't. Sorry, go ahead, Josh.
Well, do you want? I just ran a couple numbers here, put my head down when that question was asked because I felt there would be a follow-up. And if we use a household income of 125,000, Joel, and we use a rate of 4.2, the clients would qualify for $561,000 mortgage. If that interest rate reduces to 3.7, the 561 becomes $588,000 mortgage. So a difference of 27,000 with a 50 basis point reduction to the interest rate.
No, that's a great answer. Thank you. I appreciate that.
You're welcome. Thought I'd get ahead of it there.
Look at the big brain on Josh. I love that you pulled that off. Good job, buddy.
Where we're always gonna have people sitting there to like, well, I want interest rates to be below 3 again. Like, are we gonna see that in the near future, you guys think? I mean, I know you don't have a crystal ball, but
I think it's very unlikely that rates are going that low. And normally my rebuttal to someone who's hemming and hawing about that is if they do that, the reverse of that will be a hotter real estate market. Like that just happens anytime you see rates drop that way. So often you're not really that much further ahead when you look at, okay, I'm paying less for my mortgage, but values have gone up by 7% or 6% as a result of that. So we often will run that math scenario for people, but our biggest advice is trying to time an interest rate market to make a real estate decision is A, pretty impossible, and B, probably not the right reason to be buying a property anyway.
and then
You know, Andrew, what we've heard a lot of rumblings of is settling in the mid to low threes. So that would be pretty nice historically. We were pretty
yeah,
spoiled there. COVID was crazy, but even up into before, it was about a decade, right? There was a lot of sub 3% fixed rates. And I think now with that concern with inflation and the real estate market going crazy again, they're going to be very cautious.
I had 2 fixed in a row at like 2.6 basically.
Yeah.
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 And then, but on the rentals I bought in the meantime, I was kind of on I was kind of like 3.3, 3 to 3.3 on variables for like a lot of years before COVID hit. So yeah, I mean, low threes would be great. Definitely good with that. You go for a couple more now. Investor wise, like I think we're already seeing cash flow properties kind of coming back a little bit now that prices are settling. But I mean, do you guys expect the investor purchases to pick up as we kind of get down to that mid 3 point or close to, I guess, with another drop?
Yeah, I mean, I think one of the things that makes investment a better opportunity is just supply and price point. So, I mean, a lot of the trouble has been interest rates were coming down a little bit, but supply was such an issue that prices were going up. So, the benefit was higher rents in Calgary and area, but it didn't necessarily work that well. So, whenever you see a bit of a settling, especially we're probably seeing a bit of a settling plus lower interest rates, I think investors are going to see an opportunity here for sure in the next 6 to 12 months. You're starting to see it now, right? They have choice, pricing's somewhat settling. So yeah, I think there's definitely going to be an opportunity from an investment standpoint in the Calgary area for sure.
Sandy, you just helped a buyer recently, and I know a couple of you are helping buyers. Do you guys have any questions on kind of what you're hearing from that end on mortgages?
No, I'm okay.
My guys are just porting a mortgage over from their existing one to send over. So they seem to be fine.
Right on. Right on.
What's the, I guess for those people that haven't used a bank mortgage connection before or sent clients your way, can you guys give us like what's the process, what we're looking at when we send clients up to your team?
I was letting you go, Josh, but
Oh, okay. Sorry. It was my fault. I apologize. You want just call, text, email, whatever works best for you. You know, Joe and I are the front. We like to take those calls. We like to have the conversations, strategize with the clients, get them going on the application. We do have a team of very skilled underwriters. I like to tell clients that 2 heads are better than 1. So you're going to have a pair of us who are on this, watching this, talking about your mortgage daily and making sure we're staying current and on top of things. But yes, any questions or you want to hand over a lead, certainly we would love the opportunity. Call, text, email, whatever's best for you, and we'll jump on top of it.
Nice. Yeah, and there's a good, like you guys have the good application too. It's pretty easy for people to work through. So
we work pretty hard to be hyper responsive. Like even if it, say it's a weekend, running around with kids, we both have kids, I'll at least acknowledge, right? Like, hey, thank you so much. Heading into a football game. May I reach out to you after? Like we just never want anyone sitting in limbo. So we're very much on top of it and want to make sure, like I said, that we're very responsive to our clients and our partners. So.
commercial side of things, you guys solutions to handle commercial mortgages?
we do. We have a commercial expert on our team that we deal with. His name's Sam, actually. So if you do come across any commercial stuff, we have a partner that we deal with on it. So I know some of you probably deal in that space, and it's definitely a very different space than residential real estate. It's tied to the property more than necessarily the buyer. So, but certainly if you have something, we have the team and the power to handle that for you too. The only other thing I'll say on your clients, Josh kind of alluded to our responsiveness. The big thing that we want to do is make sure that your clients are prepared and that you're not wasting your time and showing them houses of their dreams that aren't realities for them. So our commitment to you is if we can engage with a client quickly, as long as they do that application, kind of follow our steps, we'll have within that day answers for you that this is looking good or not. We're just waiting on something from them. So we're always going to be really communicative with you, and our goal is within kind of 24 hours at the long side to be able to tell you that, like, yeah, you can be shopping with these people and you're not going to be disappointed. So we can do it really quickly for you too, and we think that can give you a little power to get out there faster and find those right properties for them.
Yeah, it's been a huge help. And like, if you're having clients that are struggling with their broker, or like they're not getting the answer they need, like if you need to run it by Mortgage Connection, they'll be quick on it. Just like if they say it's no go, it's probably no go. But if you're like not sure, which I've in the past too, I'm like, I don't trust that this person actually knows what they're doing properly, or like it seems weird, and we run the file by them. And I mean, kind of leave it up to Joe or Josh to be like, yeah, this ain't gonna work. We got to move a different direction. Or if it's like, yeah, we can make this happen. The response time is great, and you guys process stuff fast too. I mean, try to give people the amount of time they can take for their conditions. But if you do have tight condition properties, multiple offers, that kind of thing, it really helps to have a team that's going to process things quickly too.
Thank you, Andrew.
Yeah. Questions? Bill, you got anything else? Back to mine.
Yeah, I do have a quick question. Do you guys do any lendings on business sales? Like people that are selling their businesses? That's a completely different ball of wax, or do you deal with that?
So are you saying that's not tied with any real estate, just sale of a business?
Correct, like a business asset sale.
Yeah, that's not something that we specialize in. We can refer it off to like a BDC type lending institution. That's really probably your best bet for that type of transaction. So it's not our wheelhouse. But
And then land wise, actually, are you guys referring that over to like ATB like service kind of thing?
Correct.
if it's a land deal, we can do it. There's not a ton of lenders that do it. You kind of name two of the big ones. But land deals, we do have the ability to help you with those. No problem.
Emily, you here now? They're dropping kids.
Yeah,
Joe?
I'm just popping on my other computer.
Oh,
Give me 2 seconds.
figure she's gonna have some stuff.
What are you guys seeing in the market right now?
For sales wise, I'm seeing a lot of sellers. I think their house is overpriced, and I've seen a lot of buyers who think they're gonna get a better deal than they're actually gonna get. And
It's certainly changed year over year.
so far apart. Yeah.
Yeah.
Like both sides, like they just, yeah. I'd say buyers and sellers are $100,000 apart on like their thinking on everything.
Wow.
Agreed.
It's frustrating.
Yeah.
I think right now with my sellers, it's hard to get them to detach emotionally from the price that they think their house is worth right now. But obviously after explaining it a little bit more to them, we gotta go low, because it just won't move, unfortunately.
What are average days on market now? 45?
I think 45.
Yeah. And a lot of areas are like pushing 60.
Yeah, yeah.
Yeah. Oh, yeah, easy. Like there's just, I mean, in Cochrane, there's going to be 5 months of inventory, I think, by the end of this month, or 4.5 last month. Some of the outskirts are really going. Calgary will hit 4 months of inventory pretty quick here too. So stuff starting to, people panic too fast, but they're also like pricing so high that just they're adding months to their sale. So like they're adding to the stress, I find. And then I think buyers are unrealistic in how far they think it's going to drop too. Because like in their head, like, well, it's going to come all the way back. Like 30 of that 50% we gain is like, man, probably not, because they're gonna they're lowering rates already. It's going to stabilize.
Yeah.
But everybody kind of thinks it's going to drop more, and sellers, I think sellers, which always happens from what I've seen in the market swings, is sellers have that regret, like, I should have sold last year. It's like, it's okay, you're buying at the same market you're selling.
Exactly. Yeah. Right.
It's all good. So I think it helped. Like the biggest thing I'm doing is like, okay, how much, like, what do you actually need out of this house? Like, what's your goal for the next house? Like, oh, I need 150,000 to put down. Okay, like, yes, we have wiggle room to make that happen. Okay, let's make sure we hit your goal instead of, oh, I really want 700. It's like, yeah, we're not going to get it. So does 650 get your goal? Yes. Okay, then why are we panicking about the actual number?
Yeah.
Like, I sold mine quick at this year. Like, I wanted to be on the market first week of February because I could see what's going to happen with inventory in Cochrane. So I was like, and I want that 700, which I got. But if I sold it in May, it would have been 650. But like for me, I was like, I want the 7. I'm going right now. But you know, most people, like, if they understand what they're doing next, they're not going to panic about it. And then like I get a lot of call like, oh, there's no action on my property, like from agents on the team. I was like, well, you had 5 showings this week, you had some good feedback. It will take 2 months to sell. So
Yeah.
I think there's like panic in the realtor side too, where like everybody's used to just selling a house in one day.
I have a question.
Okay.
So because I'm a bit newer to this industry, I just want to understand what's projecting that that this market will stay like this for the next 2 years? Because I've been hearing that a lot, like we're going to be in this for 2 to 3 years. What is setting that right now? Like why wouldn't it change kind of whenever? How do we know that there's a set time?
Is that a real estate question or just a mortgage?
I
Like
think
rate
it's
or what?
economy / mortgage
Yeah.
everything question actually.
Okay. I mean, I guess we can touch base from the mortgage side of it. I mean, what and economic side, like what drives a market, especially in Alberta, is job creation more than anything. So you had a pretty robust um, job situation in Alberta, and you also had historical migration and immigration into the province. So the demand for real estate was extremely high. That settled a little bit in the sense that migration has slowed down. Job creation is not nearly as high. There's actually been some retraction from some major like oil and gas companies, that sort of thing. So, I think the thing to keep in mind is any of the retraction we're seeing is not really taking us to a bad spot. It's taking us from a peak into a more balanced market where sellers and buyers are kind of on a more fair playing field. The good news from a market standpoint is if that was happening plus interest rates were going the wrong way, that's when I would start to get a little more worried that you're going to see a much tougher market out there. But with with interest rates, looking that they're going to continue to come down a little bit, that's going to have a bit of a buoyant effect to the market, which should hopefully counter any of the, oversupply if that starts to happen, or concern with economic conditions. I mean, Alberta, especially kind of Calgary and surrounding area, is still a pretty attractive place to be buying real estate, especially when you look at other major centers. And it's a really attractive place to live from an affordability standpoint. And the jobs here in general are higher paying, with less tax and all that good stuff. So I think we're not going to probably have the crazy markets we've had, but I think we're still in a pretty good spot from an economic standpoint and conditions to have a pretty balanced and still active market from a real estate standpoint.
Thank you.
Joel, what are you seeing from your buyer clients as far as sentiment? I know you're been showing a lot of properties lately?
Yeah, everybody still just thinks now's the time to get the best deal of all time and $75,000 below this price or something, but still want to sell their property at $50,000 higher than the market. So, and unfortunately, then there's a lot of realtors that are going, yes, that's completely doable, and then people believe it. So, and then you watch that property go up on the market, and then either never sell or sell $50,000 less than that original price that I said you need to sell at. So it's kind of like, I don't know, at least like the buy sell side, like really, I understand that sometimes people are trying to like have put themselves in a position. Maybe they're buying a new build, you know, they put these numbers together a year ago because that's how long it's going to take for this house to get built. Now the, you know, market has completely changed. And these people are still going, well, no, I need to sell at this to make this all work. And I'm like, okay, but like, it's just not realistic. And like, if we list at this price, it's going to do us more damage than good. It truly is, because then you're sitting on the market for a month. Places around you sell for even, you know, $10,000-15,000 less, which is now creating these other kind of benchmark pricings. And now we're chasing that over and over again, and we're one step behind. So it's like, we just need to do this right the first time. But it seems like nobody likes to hear that.
Yeah,
They want the top dollar. So
I think it helps to like have a mortgage broker alongside too, and just like try to explain the whole market dynamics with them with their mortgages. Because yeah, that's what I'm seeing too, and it's kind of, it grinds everything to a halt when like buyers and sellers don't want to budge on anything. But I'm having a hard time pricing. Like I have 4 listings signed for the new year, but all the pricing is basically a question mark for them right now. Like we'll see where we're at the end of the year. I have no idea. It's like, I don't want to tell you you're getting this amount. Like you'll get somewhere in this. My windows are like huge right now. Like somewhere between 550 and 625. Just making sure I don't overpromise anything. Cause yeah, it's tough right now. Like everything's moving. I mean, the bank watches inflation by the month to make these decisions too on some of the mortgage, on some of the interest rates. Any more questions? Good. Next rate announcement.
no, I have
Oh,
a
go
quick one.
ahead. Yeah.
Do we think we're going to see more consistent rate drops through the end of the year? Or is it going to kind of hold now for a bit and maybe 1 or 2? Or what do we kind of think is going to happen?
I'll just jump in on that one, Josh. So there's only a couple more rate announcement dates. We aren't expecting more than 2. The question is, do they do one in October and then another one, or are they going to hold? And that's it. My prediction is if they go 2, they'll do 25 and 25. If they're only doing 1, you could see a hold in October and then a December drop. So if they do one in October, I think they'll do another one in December. That's my guess. But if they don't, they'll just be one more. But I don't know if there's no guarantee they're going to do any of this. But I think at least another 25 basis point drop is happening before the end of
The US, I mean, they're still quite a lot higher than us. Like, I guess without like, because of trade negotiations and everything, do you think we're like more tied right now than previous as to what like the US is doing as far as their economy and ours and everything?
Josh, do you want that one or?
No, that's a tough. Well, we're certainly tied. Yeah, I no, I don't know how to answer that one, Joe. Take it away if you've got one.
We're definitely tied. The only thing I will say is rate increases and drops have more power in Canada than they do in the US. And why that is twofold. Canadians carry more debt than Americans. And mortgages don't have the same tax deductibility in Canada as they do in the States. So an interest rate fluctuation impacts Canadians more than it does Americans. So the Bank of Canada is actually one of the most powerful central banks in that when they move rates, it actually has bigger economic impact than it does in basically the UK, the US, most of Europe, Japan. So it has a bigger impact. So that kind of indicates that the US could drop, half and Canada only does a quarter, and it would be the same impact from an economic standpoint. But like if the US is dropping, Canada is dropping too. Like that's happening. The US maybe has more reason to drop than Canada. Actually, there's bigger issues in the US than there is in Canada right now. But I think you're going to see both countries kind of in step with reducing interest rates a bit more than where they are right now.
I saw last month, but where's 3-year and 5-year fixed roughly right now with you guys lenders?
Low 4, sub 4. Like you're basically the 4% mark, Andrew. And I just threw a link in the chat there, Market Watch, the bond market. That's something I take a look at pretty much daily. Like if you want to see where fixed rates are going, that's the Canadian 5-year bond. You look at the 3-month chart, you can see a steady decline. It's a pretty user-friendly site. It brings you right to that bond, and that'll help you determine where the fixed rates could be headed.
Okay, I'm gonna post that for everybody too in the description for this one.
One thing Canada did do well, and I'm not the biggest fan of government, but they removed those retaliatory tariffs, which helped to keep inflation under control. It was a big concern of ours, is added cost of goods with tariffs. So it looks like that was a positive thing what the government's done recently, but still keep, inflation appears to be under control, but the job market is certainly hurting. So that's still what's driving.
That was always the thing, would be like retaliatory tariffs, like get the sentiment, but all we're doing is driving up our own inflation.
Correct. And then getting inflation back to spot where it's of issue, right?
Yeah. Like I'm all about sticking it to them, but it just hurts us more.
You're right. Right. At what cost?
Yeah. They're gonna keep on chugging along. I mean, they got some blips right now, but their economy is just so big. Like at some point it's back on the rails anyway, so we might as well just look at what we can do to keep our economy kind of at least rolling along, and people not like, people carry a lot of debt. I mean, I pull titles all the time for listings, and people have remortgaged, double mortgaged, and like it can get crazy out there.
I know you guys talked, okay, maybe like one more rate cut, maybe 2, but do you guys see this like bottoming, like it won't go below a certain point after like next year? And obviously there's like a lot of factors that are going to be considered into when they do the rate cuts, but like do you just see a point where like Bank of Canada goes like, no, we just can't drop interest rates below X amount?
I don't think there's like a set number, but I mean, the idea of kind of the COVID era interest rates, like that was a false rate environment. So like that's not coming back unless you have another like crazy world event that causes something like that. But where rates are going is kind of a more normal place for the economic conditions we're in. So like there's not a limit to that depending on what the economies do, but realistically, you're probably half a point. Maybe if things got like really bad from a growth standpoint, there's another half point, but I would say you're within 1% of probably where a bottoming out would be for both fixed rates and variable rates.
Yeah, I hope that we've learned that those sub 2% interest rates cause more damage than good. I really enjoyed them, but
yeah, it does. It hurts, and like honestly, it's not that much fun. It's like it's fun when you list a property and it's sold in 24 hours, I guess, but a lot of it's not that much fun. Like you have buyers that super frustrated, can't get a house, And then on the sell side, even, I mean, I had deals where I had like 20 offers and trying to organize the stuff, and people are like getting mean over things. And it's just like, yeah, a little more balance is fine with me. Like, and then prices go through the roof. Like,
Right, yeah, it's just chaos. Yeah.
Yeah, and I think our advantage here is having prices that are reasonable compared to Toronto and Vancouver. I think losing our advantage in Calgary, we lost some of it, but we're still pretty good. I think if the average house is $1 million plus, then I think a lot of the extra moving, like migration, just starts flowing to Edmonton over us again too. So I think Edmonton's done well. You can get a detached house there for 450 grand. People will go there, but I think if the spread gets like super big, I just, for us being in Calgary and trying to trade real estate here, I like where we are right now. Well, anybody else? Awesome. Well, thanks, guys.
Thank you.
Thank you guys. Appreciate the
So
opportunity.
October 29th is the next rate announcement. Yeah, I'll get you guys on Monday meeting. Maybe we'll go like right after that announcement. Get you guys on the Monday after. We can chat what's going on after that. So
Thank you
Appreciate
guys.
the opportunity. Yeah, thank you.
Okay, thank you all.
Thank
thank
you.
you, everybody.
Okay, bye.